It's official. We have some feedback from a pretty popular crypto trader and a macro economist on what the price prediction of Bitcoin will be for 2023 and beyond. Is this a bull trap? Is this the bull market confirmed? And also, who the heck paid Sam Bankman-Fried's $250 million bail? That's what we're talking about in today's video. If you guys enjoy these episodes, these updates, please hit the like button and hit subscribe. I sure appreciate it. We put out videos every day. And for those who want even more information on what we're doing with our cryptocurrencies and how we are preparing for the bull run, and we're going to reap the benefits of preparations now rather than waiting for when real FOMO kicks in. If you want to know more, you have to check out the CT Club. A link for it is down below in the video description. So for those of you who are familiar with DataDash on YouTube, over 500,000 subs there, he's telling people that this is a bull trap. That classic move from big whales trying to influence financial markets. They do this in the stock market, and now they're playing their same games in crypto. Apparently, this is his opinion, that they're going to try to pump the price to a level where retail traders are going to buy in, thinking that it is indeed confirmed a bull run and it's safe to come in now without having any worry of a pullback or a drop lower than these levels. He's also anticipating, of course, the Fed's first meeting of the year happening tomorrow, Wednesday, February 1st. And basically that anticipation is, some people think it's going to go up after that meeting. Some people think it's going to go down after that meeting. And DataDash basically thinks that it's not really going to do much, maybe go up slowly, and then it's going to hit a level where people are thinking it's confirmation that the bull run is in, and then they're going to start shorting and drive the price lower to buy in lower. Well, Bitcoin is chilling at $23,000. Retail is not in yet, and it just keeps trucking along. So who knows what's going to happen? But regardless, for those people who are waiting for, he's not saying how low it could go either, but $12,000, $13,000, is it really going to drop almost 50% from here? Is that worth it for you to try to time the market and get it wrong? Or do you have any sense of a long-term outlook on crypto where you can just dollar cost average? That, my friend, is the most stress-free way to continually gain exposure to this new asset class that is disrupting a lot of systems that need to be disrupted. Now, Raoul Pal, classic macro economist now, he is bullish on the year 2023 for crypto and any risk assets. Although, let's be real, both DataDash and Raoul Pal are basically saying Bitcoin's going to go up and then it's going to go down, and then it's probably going to go up again. So Raoul Pal is saying, he thinks that Bitcoin within 2023 and crypto in general is going to reach highs where we think it's, oh my gosh, we're going to the moon, new all-time highs this year. And then he thinks it's going to crash to the point where we think crypto is dead again. And then he thinks it's going to even out, but still, all in all, come out with a profit at the end of 2023. So Bitcoin is volatile. It's probably going to go up. It's probably going to go down again. But again, with that long-term outlook, it's hard not to be bullish in the long term for Bitcoin. Now, Pantera Capital, a very classic investment fund in crypto. They were founded in 2013. They are turning their sights to altcoins for the first time in almost a year, spring 2022. They are looking at DeFi. They're probably preparing for alt season, which for those of you who are new, typically happens after the number one Bitcoin, and by terms of market cap, sees profits or sees a decent rise, and then people take profits and feed those profits into altcoins, which have a lower market cap, often a little bit lower liquidity. So basically less money pumps up altcoins faster than it would have, let's say, Bitcoin. So that's why I think Bitcoin is doing well, and Pantera Capital thinks long term, they're looking at DeFi, and they're preparing for that now. That's what Toby and I are doing as well. Always trying to accumulate more position into Bitcoin, Ethereum as well, and altcoins, especially before a bull run. And then you take profits of your altcoins, because you know why? Usually they lose about 90+% at the end of a bull run into the bear market. And it's really hard to hang on to bags of coins that are, let's say, 2 months old, 6 months old, 2 years old. Those are infant coins. They have yet to really prove themselves long term. Most likely they haven't encountered any real major glitches in the network. The dev team hasn't yet to prove themselves. So basically, it's easier to let go of the new coins and then re-enter if you want to in the next cycle. This, by the way, is not investment advice. It's just me sharing my own experience of having exposure to cryptocurrencies over the years. Do your own research, invest at your own risk, only what you're willing to lose, and please form an investment plan and stick to it. Now, also, we have to talk about Alameda Research and Sam Bankman-Fried. But first, Alameda Research, they are asking for $445 million back from Voyager because apparently after Voyager declared bankruptcy, they pretty much demanded that Alameda would repay their loans even before they had matured, before they really needed to. Their collateral was still there for Voyager, but no, they decided to recall their loans and Alameda paid it. Now, because this happened after Voyager declared bankruptcy, they want to get that cash back. So that's an interesting amount of money, a huge chunk actually. What does that look like for FTX users? And also this article, if you're interested, I'll link it down below in the video description. They're basically saying how lending platforms like Voyager not only were custodial platforms that were taking risks with their users' money, not telling their users about those risks, obviously, but they were also, essentially feeding the monster that was Alameda Research, giving them the funds that allowed them to misappropriate in many different ways. So it's just layer on layer of counterparty risk, and the end users are always the one to suffer. But now let's talk about Sam Bankman-Fried. You remember when he posted bail, $250 million, and he wasn't going to be telling the public who the two other co-signers of his bail were. He was saying how his parents were receiving death threats. A lot of other people were receiving death threats for posting bail for SBF, and now he's sitting all cozy in his parents' house on house arrest until October of this year when his trial begins. The judge now ruled that those two co-signers will be made public. So it'll be really interesting to see who was trying to be the shadowy figure supporting Sam Bankman-Fried. I think we're going to find out pretty soon who those two people were. I think we're going to learn even more about the ties that Sam Bankman-Fried has and how deep that rabbit hole really goes. Going to wrap it up for today's episode. Thank you so much for watching. Again, if you guys enjoy these episodes, these updates, please hit the like button. Don't mind my Band-Aid. And hit subscribe. I'll see you again tomorrow. Bye, guys.